Joining me now for a closer look at that action in the markets is Jacobus Brink from the Schmidt family office. Jacobus, a brand new week. Happy Monday to you.
Thank you. Happy Monday to you as well.
All right, it's been quite a ride. In fact, I'm quite surprised to see markets mostly in the green today. In fact, banks are really leading those gains, up more than 2%, all of the big four there, Jacobus. Let's talk about what market participants are trying to take stock of today.
Yeah, no, I think, it's pretty much at this stage all about the election outcome. Obviously, we got the IEC confirming the results last night. And, yeah, the market seems to be taking it in a positive light. I think the fact that we're seeing the ANC, fairly open with regards to coalition discussions. We saw the DA, indicating earlier that, they are open to a coalition discussion. And, I think the big thing at this stage is, will the DA in those coalition discussions actually allow Cyril Ramaphosa, to stay on as president? There'll obviously be a few caveats to those discussions, but yeah, in general, I think more positive than negative. You see, the rand has strengthened a little bit over the last few hours, and we're also seeing bond yields tick down a little bit after swelling off quite severely last week. So yeah, all in all, it seems to be a positive picture.
Also looking at the rand, 18.71 to the dollar could be better, but I guess right now we're just grateful that it didn't breach that 19 mark.
Yeah, I know. At this stage, it hasn't reached the 19 mark. You never know what happens over the next couple of weeks. But yeah, according to the Constitution, we have 2 weeks to elect or for Parliament to regather with a new Speaker and a new President. So yeah, there's still a lot that can happen. And I think, yeah, investors will probably do well to keep an eye on bond yields in the rand. We'll probably see any bad news or good news for that matter showing up there first.
Looking at the global landscape, the ECB this week expected to meet. Are you expecting interest rate cuts to come out of Europe?
Yeah, a very interesting one. We saw a conversation with Christine Lagarde, the ECB chairwoman, last week, and it seems like they are fairly confident that we will be cutting rates on Thursday. I think the thing that's making it a little bit more interesting will definitely be the post-decision press conference. Markets are currently very uncertain on any sort of future rate cuts, and they did indicate that they will be very data dependent. We saw some headline CPI numbers out of the EU last week coming in a little bit higher than expected. So yeah, it's still pretty much up in the air, and it feels like we're almost seeing the same moves in the European capital markets than we did in the US. Obviously with starting the year off with I think about 6 rate cuts, and that's almost been completely priced out now. And it seems like the ECB might sort of be leaning, in the same direction. But once again, they did indicate that they'll be data dependent. So yeah, the big focus will be on the press conference post the decision on Thursday.
I must also ask you about, what we're seeing with the OPEC countries there, and maybe looking at the decision that might emerge there in terms of cutting back on output. We know that that's kept the price around the $80 mark, maybe a little bit more. And if this could be sufficient for these OPEC plus countries, we don't need to see further cuts, trying to artificially raise that oil price.
Yeah, no, I mean that's always a very controversial issue to discuss. But yeah, I think the three things that sort of the oil price is sort of looking, or the oil investors are currently keeping an eye on, is the Middle East. It seems to have been put on the back burner a little bit over the past number of weeks, and we haven't really seen fresh news out of that. So the oil seems to be a little bit putting that at the back of its mind currently. And the second thing is the global growth story. There are still talks of a recession, and that obviously also shows up in the oil price, if there is possible weakness coming out. But at this stage, yeah, it's all about the OPEC plus indication that they will be cutting supply even more, and that's put some pressure on oil at the moment. And it is a bit of a catch-22, because if that oil price remains high, we could see that start to feed into inflation, which could put the US and the ECB even under pressure of not actually cutting rates. We already saw indications last week as well out of the UK that they also might only be cutting rates once this year, not two, as the market was initially expecting. Yeah, so a lot riding on this, and we saw the oil price ticking up a bit post that decision this morning.
Also want to get your thoughts on what we might see later this week with non-farm payrolls coming out of the US. We normally sit back and kind of wait for them to emerge here, but is there any likelihood that these numbers will come out stronger than what we'd like to see?
Yeah, the market's expecting quite a substantial number, I think at 185,000 new jobs. But we'll start to get an indication earlier in the week already. We're getting the JOLTS releases. Obviously there'll be the initial jobless claims on Thursday. So it should start to give us a little bit of an indication. And, the most recent data we actually got out of the US in the employment space has pointed to some weakness, starting to creep in. And that's obviously also going to weigh on the Fed. They've indicated that as soon as they see some weakness in the labor market showing up, that that could prompt them to actually cut rates earlier. But yeah, the numbers we've seen up until now has been fairly resilient, even though here and there, some various surveys obviously take into account various factors when they come out with these numbers, and some of them have indicated a slight weakness, but in general it's still been fairly tight. So yeah, the market will definitely be focused on that a lot as well for any future rate cuts, or even as some of the Fed members that spoke last week even alluded to possibility, that they can't rule out a rate hike, even though it won't be necessarily a lot of rate hikes. But the fact that they are actually, mentioning rate hikes in the conversation now is a complete turnaround to what we saw earlier in the year. So yeah, big focus on those numbers on Friday.
And then I'm keen to get your thoughts on what we might be seeing coming out of Brait here in South Africa. It's looking at that share price, I think it's down 13%. They're talking about raising capital here. We know that this is a company that's a holdco, so it trades at a discount already, Jacobus. Is there a case to be made for this capital raise, or even for Brait to continue to be listed?
Yeah, Brait has been, the gift that keeps on taking away over the last number of years. It's currently, as you mentioned, down quite substantially. Whether it needs to be, remain listed is a question by itself. The market might be seeing this as sort of a last gasp effort to raise some more capital, and just keeping the company listed. But it's probably not the best time to do it either. Obviously we didn't see as bad of a result out of the elections, as what the market was possibly expecting. And just, capital raise in South Africa, we've seen a lot of delistings. This probably isn't the best time now. So it's an interesting one, and I think, as you mentioned, investors not really finding too much favor in that one.
With that said, Jacobus, I want to get your stock pick, but first, let's take a look at counters that have found favor with your industry peers.
Yeah, I'm picking a company called PDD. It's the holding company for Temu. Now, Temu is taking over the market here in South Africa. It's the most downloaded app in South Africa. And if you want something, they've got it. Now, obviously, South Africa is a very small market, but they doubled their sales in the last quarter worldwide. Only NVIDIA has done that. No other company's done that. I know the share price has been quite strong, but it's still below where it was 2 years ago. And I think Temu, I've used it. I think it's one of the most fantastic websites. We have a little advantage at the moment in South Africa, because not only are their prices quite competitive, but they're offering free shipping. So, takealot.com mustn't worry about Amazon. Amazon and takealot.com must worry about Temu.
The reason I'm picking Novartis is the share price is slightly up, but one thing I think is very positive for them is that they have a deal with a company called Isomorphic Labs, which is an offshoot from Google/Alphabet. They have some AI technology around pharmaceutical that I think may bear a lot of fruits going forward. We've seen already with the COVID vaccines that stuff that we thought was science fiction a couple of years ago is actually in the play right now. And we could be seeing quite a number of these breakthrough drugs, something like the GLP stuff that's come out, things like Mounjaro or Ozempic, that cause huge profitability for things like Eli Lilly and Novo Nordisk. And I think that being a partner with Google in this thing could give massive upside to Novartis going forward.
Can you get your thoughts on some of those? We've got PDD Holdings, and then we've got Novartis.
Yeah, so two interesting ones. Pinduoduo, you know, we've been on the China train for quite some time now, and they've done very well over the last few weeks. So the price is up quite a bit there. I think the one thing that might be a little bit negative still is over the past few days we saw the European Commission actually coming out and putting some stricter online content rules around that, so that made the share price sell off a little bit. But yeah, I mean, still I think a great company and a great buy, you know, and it's still very attractively valued. So just Chinese internet stocks in general, you know, we're pretty bullish on those as well. And then, you know, Novartis, always an interesting one. There's a lot going on in the healthcare space currently globally with, as mentioned there, the Ozempic mania, etc. So also an interesting one. But you know, with these things, these type of stocks, you do tend to get a bit of a binary outcome sometimes. You know, it's a sort of a hit or miss. It's the miss type of thing. So yeah, purely based on, you know, what our view's been on China and how the tech space in China specifically has been valued. You know, Pinduoduo gets my backing there.
And with that said, which counter are you loving this Monday afternoon?
Yeah, there's quite a few of them. I mean, seeing that SA Inc. has been priced pretty cheaply over the last number of months, you know, in anticipation of the election. I suppose with the election results, possibly, you know, I'm a little bit more optimistic than most, I suppose, on those. So my stock pick is Nedbank. You know, I think as far as the four big banks are concerned, probably still our top pick. You know, it's trading at a fair price to book of about 0.9 times and an extremely attractive dividend yield of 10%. You know, it's almost it's crazy to think that you can pick up, you know, one of the big four banks in South Africa at a 10% dividend yield. It's been trading in a very sort of sideways channel over the last 18 or 24 months, and it seems to be sort of looking to break out of that channel to the upside. So my stock pick today is Nedbank.
Wonderful, Jacobus. A pleasure having you today. Thank you so much for getting the week going for us. That was your midday markets update with Jacobus Brink from the Schmidt family office.